Good morning, students. Today, in this series of advanced banking principles and practices, I would like to explain how the banks are operating into the market, how they are lending their money. So, what exactly is the modus operandi? So, let us start. Exactly, banks avail funds from public, number one, and number two, from directly from the apex banker, that is the Reserve Bank of India, and even it can avail the funds from other bankers also. So, exactly when the funds are availed by the bank, it is going to lend it to some companies or some individuals as proprietors or partners or a partnership concern, or a public limited company or a private limited company. But it is exactly the sole prerogative of the bank itself. So, how the bank is lending the money, it depends entirely on the banking policies and guidelines. So, generally, the bank exactly hire a risk head or risk manager to just sanction the funds to the people who are asking for who are in the need of the money. So the credit or risk manager checks mainly 5 to 6 parameters. Like for example, number one is capacity to repay. Number two is intention checking. Number three is the collateral. Collateral is very important. Number four is he can put some conditions, and number five is checking the characters. So exactly there are n number of documents through which a banker or a risk manager checks the credibility of the person who is intending to avail funds from the bank. So, for example, if somebody has availed a loan from a bank in past, so that can be checked by the banker by asking the same loan repayment track, that is called the loan repayment statement from the customer. So here he will be able to understand how he is, what exactly is his habit, how is he honoring his EMIs. Is he honoring the EMIs on time? If any EMIs got bounced, how exactly and within what much of how much of time he just honored that EMI? So what and the most important thing is what exactly is the reason of bouncing? Why the check got dishonored? Right? When he is going to pay the EMI, if the EMI got bounced because of some technical reason, so that is quite justifiable. But if funds are insufficient, that exactly is an alarming situation. And even if the customer comes along with some justification and he shows that the EMI check got cleared within 30 DPD, 30 days, so it makes sense. So apart from this, some collateral, bank can ask from some collateral as security. That is extremely important because banker can judge the credibility of the person, but circumstances cannot be assessed properly by the risk manager. So in that case, the security, that is the collateral, is the most important thing. And while taking the collateral, the most important thing is the collateral value. And for understanding the collateral value, the banker needs to just get the property value from the certified architects, and architects gives the correct value of the asset, so that in case default occurs due to any reason and bank has to just recover its money, its capital, then bank can sell it off the property and just recover the loan amount, and if some balance is left, the bank can just give it to the lender back. So apart from this, banks need to just go through the bank statements like the cash credit account and the current account and saving account of the customer. And the most important thing is bank can have the CIBIL report, which gives the entire credit history of the customer along with the credit score of the client. So there are certain instances when the client is hiding something. So he has availed some loans in past, but he is not willing to disclose it. So that can well understood by just taking the detail of his CIBIL report. So that's it for the day. Thank you so much.